All right, welcome back for another episode of Carnivore Trades. Today is Monday, May 1st, 2023. If you're not done so already, please give the video a thumbs up, like, comment, subscribe to the channel. Come find me on carnivoretrades.com for swing trading alerts and analysis. Anyways, let's get into it here. So, really quiet day, all things considered here. Markets are now trading fractionally lower. So we were basically flat to positive pretty much all day long, and now we're kind of flat to negative, really. So Spider's down 15 basis points, Q's down 0.25%, Dow down about 0.25% as well, and the Russell 2000 down 15. So nothing crazy here. The Russell getting rejected at that 20-day moving average there, so we'll talk about that in a few minutes. Right now, markets just look a little tired here, so we'd had that big move. If we look on the intraday, just look at the big pop here, 404, big gap up, trend day, and then really another trend day Friday as well. You could make a case you got a little mini kind of head and shoulder there on the 10 minutes, so maybe that has to do some backing and filling. But it just very extended here. So, 404 up to the high of today at 417. That's a huge move in just 3 days. So market's looking a little on the tired side. The triple Qs were mostly red for the majority of the day. Basically just kind of putting in a doji here, an inside day. Nothing terrible though. It did finally though. We did finally fill that gap there, and now I'm kind of watching this wedge pattern here as well. So we go back to the early, first week of the year, and you kind of just connect it through the lows there, and you can kind of say we kissed it there, and then on the higher side, probably need to correct that a little bit, but you can see on the upside, that's where we are. And again, like I've been saying, I don't see a ton of upside here for the Qs. The reason for that is that 20-month moving average right now, which we're into, as well as now this rising wedge. Again, we got the gap fill. So these are all kind of resistance areas here for the Qs. Also, right now on the SPX, again, I told you guys this last week, the SPX has a little bit more upside than the Qs or the S&P, and you're seeing that a little bit reflective today. Spiders are down a little bit less than the Qs. But again, there's a lot of gamma up here at 4,200, and I do think it probably needs to get tested. Whether that's tomorrow or not, I would definitely say on the FOMC that can certainly happen. For the spiders, again, it's right around that 420 handle. There is that big fat gap at 422. These are all areas that can get tested, and again, that would likely coincide with maybe a pierce or a tag again of this trend line on the Qs. Maybe if you could get an outside move, you could go up and fill this gap. It's not that far away. And again, if you get, the Fed says something dovish, we've seen 100-point moves in, from 2:30 to 4 o'clock, when Powell starts talking. We've seen that plenty of times last year. So it's certainly not out of the question that we could get, a 50 or 70-point move there on the Qs, and, maybe a 80-point move or so on the SPY, either way, but you guys get the idea. But in any case, market's backing off here. I would assume tomorrow will be a little bit on the quieter side as well, although we do have some more earnings. I think Starbucks, Ford, AMD, that will be a big one. Uber is another one that's a transport, so that will be important there. DJT, again, getting a nice bounce off the lows here. Still did a lot of technical damage last week, and again, lower highs there. Let's take a look. We could actually make a case that we have a trend line here through the highs. So we'll be watching that going into tomorrow. And now you could even say this is kind of a wedge pattern, right? So if we just extend this out, previously was kind of like a head and shoulder look there. It triggered on the daily, never triggered on the weekly, but it still can trigger. But either way, just a big wedge pattern there, symmetrical wedge, if anything. For the transport. So we'll be watching that. Again, that should be resistance there on the upside for DJT. But either way, again, markets right now, they're backing off. We'll see what it does tomorrow. The one thing I kind of noticed, and I talked about this last week, is we had that move. Sorry, just bear with me. Okay, sorry. We had that big move in March. We had kind of this bull flag that sort of broke down, and then we kind of chopped around for a little bit. Then we had that big pop off the lows, and everybody got bullish after those 2 days. You remember that? Thursday, Friday, and then Monday, look at the price action, and then into the rest of the week. It's almost exactly the same. So we had kind of a, this wasn't the best. I mean, you got a little inside bar pattern there. It broke down, it failed. And then 1-2, big pop. Everybody got bullish last weekend. And then you have like almost the same exact setup here. The only problem is tomorrow, I would just find it very unusual if we just started throwing up tomorrow with no, I mean, if we could get news, I'm sure, but the market right now, I would think it would have a quiet day. But just something I noticed there, it's possible that there's a correlation kind of repeating. Remember, we did have this kind of correlation start to repeat last week, and then it fell off the tracks. But either way, just a few things to keep an eye on there. But ultimately, I expect tomorrow to be kind of a bit like today, just kind of the quieter side, maybe an inside day. And again, it's really all about the Fed, though. But at this point, if we start to trade up ahead of time and we're up into this area into the Fed, that would have me concerned as a bull. You definitely want to be down more than anything to lower expectations here. And a lot of things are not down right now. Take a look at NVIDIA right now. New 52-week highs here. This is into some major resistance here at 290 on the weekly. So there's your area there, pivot high, and then a red bar right above that. Lots of things up here. We talked about home builders here, by the way. There's the XHB, Pulte Homes. That had a nice reversal day. But by the way, we'll get into it in a minute here. But in any case, market sideways here. Let's look at a few sectors. Russell 2000. Again, we had that bear flag breakdown. We had a nice bounce, 20 moving average rejection. Again, I could see this maybe getting up into the 178, 180 area, but there's still a lot of resistance up there. As for the Dow, again, almost up to my 343 level, and it did back off a little bit. Again, we'll see what it does tomorrow. Again, your bigger max upside would be this upsloping trend line there. For the semis, obviously, we briefly touched on, NVIDIA. Now you're coming back into kind of this breakdown area. So again, if you look on the hourly, look at your lows here, your lows. Then we broke down, and that's essentially where we're going to right now. So that will be resistance between 250 and 252. And then, of course, we have this big rising wedge trend line and the 20-day moving average. So I think the upside right here in the short term on the semis is limited, and maybe even in the long term here. But again, they have been a leading indicator here that there is weakness out there. And we have to respect that. Moving forward, IGV, basically a flat day, nothing going on there. You do still have an inside bar. Actually, technically, I forgot. I'm sorry, Friday. We did technically close above that, but still on the weaker side and no follow through to the pop here. So IGV was a market leader. It did have a very nice bullish pattern here, and that kind of softened up, and we're nowhere near the highs again. So tech, really outside of big tech, outside of Microsoft, Meta, Google, the big boys there. Amazon's down quite a bit too, but IGV definitely on the weaker side, whereas it was a market leader previously. So just something to keep in mind there. Transports, we already touched on there. Let's look at the bonds. So the 2-year actually taking a bit of a dump today. No new lows there, no local lows, right? So we're still holding this pivot, but they have been on the softer side really all day. You see there's intraday, pretty good inside pattern there on the 10-minute. The 10-year yield also getting a nice bid. And if we look at that, so a nice, pretty much an engulfing reversal there. So yields getting a bit of a pop here. And then the 30-year is actually getting hit really hard. So that's an outside move there. And that's really into that kind of local low. So these pivots down here, if that loses that area, this could go all the way down to 126.10 on the ZB. So just a little bit of weakness there. Again, we're going into, and there's TLT there. By the way, this could be, you could make a case that's a head and shoulder there. So be careful with bonds here. Again, it is ahead of the FOMC, so I'm generally a little bit more skeptical when I see that. But nice outside move there on TLT. Again, just a little bit of weakness there in bonds. So just something to keep on your radar there. By the way, speaking of bonds, and I tweeted this out earlier, but look at HYG here. So here's your high in February. Here's the March 6th high, and then here's the March 31st high. And we've been making lower highs this whole time. We actually had an outside move down today versus the spiders and the triple Qs here, higher highs. That's a divergence. Additionally, if we just throw it on here, I'll just throw TLT on. TLT heading down with the Qs heading up. That's a divergence. Those jaws need to snap shut. And if you're wondering which way it's going to go, it's always going to go the Qs catching up to TLT. The bond market is the dog, QQQ is the tail. So just be careful of that. But either way, the market's holding up now. But just want to point that out there in bond land. Okay, so XHB. We've been talking about this. I know you guys have been commenting. I did find a nice little chart here. Credit to Markets and Mayhem for that. But here's a chart of the home builders here versus regional banks. Interesting kind of correlation here, but you can see kind of the pivot, the top in 05, 07, and then 09, 2013, 2020, even September 2020, and now April 23. So this is at an all-time high in correlation. Granted, obviously regional banks collapsing, so that's going to skew that ratio. But essentially, when you see these huge extremes here, it can be an indicator that we're getting close to a top. Now, home builders have a good environment right now because inventories are low. Why would you move, right? You know, if you had, locked in a 2% rate, but the thing is, the cost of building new homes is going up, and this is just the tip of the iceberg. Again, these rate hikes, they take time to filter through the system, and they're coming here. But again, we talked about Pulte, that is coming back in. Pretty good reversal here, not great volume. ITB, kind of an inside day, nothing terrible, but I think these are in the middle of a topping process. And just at this point, in front of a recession with rates at 5%, it just, it's to me, very, very long in the tooth, and there's no way you can justify these valuations. Same with justifying valuations on stocks like Microsoft right now and Nvidia. But in any case, just wanted to share that chart with you guys there. But home builders did come in a little bit. VNQ came in as well. Targets are still about the same there, 85 or so. I just don't really love that pattern, to be completely honest. XLF came back in. So no close above the 50 moving average. But if this consolidates, it can still get up to 34. I can't rule that out. KRE also coming in. It seems nobody cares about First Republic anymore. They're bankrupt and the market doesn't care. So, JP Morgan just gets more of their market share. Big surprise there. By the way, JPM today gapping up and then coming in off the highs. There is a lot of resistance up here at 143, 144 still. But either way, banks are banks right now. Broker dealers coming in. So again, below all four major moving averages there on the daily. I do not like this weekly chart setup. Crude here. Pretty much a quiet day. It did test 75 again. And then it came off the lows there, and now just kind of have an inside pattern. If this consolidates, it's setting up for a move to 70. If you get above this pivot high or this red bar high, 77.93, then you can go to 80, and then you can go to the 200 moving average. Those levels are just the same as they were on Friday. XLE, a little bit of a gap down, but still an inside day altogether. Nothing terrible, but not the greatest look. Actually, Exxon, again, this was kind of a red flag. Remember I talked about this. It made a new all-time high Friday, but no new closing high. And they reported earnings, and market loved it as usual. But when you're at an all-time high or close to an all-time high, this is where they closed on Thursday, and you report that type of a quarter, and you make a new all-time high and you don't close at it, it's a little bit of a red flag, right? It's kind of like maybe some profits being taken there. And again, we're seeing right now Exxon down 3%. It's not broken, but it's just a little bit of a red flag. If their earnings are so good, why can't they just blast off and make a new all-time high? So maybe some profit taking going on there. Either way, just something I noticed. XOP, inside day as well. That has a weaker chart than XLE. Same thing with OIH. I don't really love it right now. It's all over the place, and I don't like that it's got that big weekly inside bar look. And it closed back below 280 on the week as well. Nat Gas also doing some backing and filling today. So that's just kind of hanging in there. I still like this daily chart consolidation before I move through 250, but nothing really happening, all things considered today. A little bit of a nothing burger there. Dollar index, interestingly enough, so this got above and it closed above the 20-day moving average. I still haven't, I guess, so I talked about this last week. They did fix the paper trading on Thinkorswim. They did not fix the normal live trading. So I'm not sure what's going on there, but the paper trading is fixed. Apparently that's very important. But either way, the DXY here closed above this 20-day moving average. Is it going to mean a whole lot? It just means your technical position is better ahead of FOMC. They could easily knock it right back down. I don't even really love this trend line. I was just playing around with it. But either way, to me, to show more signs of strength, I would have wanted to see an up move here off double bottom, maybe a 1, 2, 3 pullback and then a push up. The fact that it took so long just to get through that 20 moving average signals weakness, and then it can get down to that 100 handle still. So I'm still kind of in that camp, unless it follows through tomorrow. If you follow through tomorrow and you punch much higher, then maybe the lows are in here. But for right now, I think ahead of the FOMC, I'm always suspect of like a breakout on anything about, ahead of a big important, especially like NVIDIA, right? Like, it's just kind of suspect that it's breaking out before AMD earnings, before the FOMC, just things that you want to pay attention to. But it did get above the 20, so that is a significant sign there. And we'll respect it here. But outside of that, let's get over to gold here. So gold, kind of a nothing burger. Really just kind of sideways action. It was green earlier, rejected that 2,000 level, or that 200 moving average, now below the 2,000 handle. Again, we got an hour here. Market set to close in 5 minutes, but we got an hour till the futures close. If it loses this green bar, that's a sign of weakness on a daily close. And it's been hammering on that level for a while. So I'm assuming that it's just a matter of time before it's going to have to go back and probably test 1950. You got 50 MA there. That's your previous breakout area. 1962 to 1970's got good support too, but you have consolidated, so I think it wants that 50 moving average. But we watch that level into the close. Silver, wild action here. Almost made a new high, then came all the way back in. This reminds me very much of Bitcoin. Remember last week when Bitcoin, we had that flag pattern, it broke down. Then we had it started to look like it wanted to bear flag, and then it had that huge outside move to 30,000, came way back in, and then it closed green, and then it had a big surge, and then it stalled, and now it's lower again. Be watching this, not to say that they're super, related, but that price action is very similar, right? Big move, down consolidation, outside move, and then way back in. So interesting price action. We'll be watching that tomorrow. Ultimately, I still think silver's got to do backing and filling anyway. Still very overbought and going into a lot of resistance on the weekly time frame, which is why I couldn't hold the gains today. Platinum coming back in. If you're super aggressive, you can take this here, but I wouldn't. It's not. I don't really love it because, like I said last week, I don't like that tail candle. If we didn't have that tail candle and we came straight down, I would say this is a buy. I'd say it's more kind of 60-40 that it can get a bounce right here, but you can try it with a tight stop. Just don't let it get below 1040. I would even say like a, confirmation below the 20 moving average would be enough to stop out. But if you're really aggressive, you can take it here for a quick long. But platinum coming in as well, obviously. Copper also got a bid with silver. Tested the 20 moving average, came in off the highs, also tested the $4 handle and came in off the highs. So this red inside bar is still intact. If you stay inside of that, it's setting up for a move to 375. So that's where it would likely go on a continuation down. Lastly, over to Bitcoin here, hitting that 28,000 handle again. This is really getting sloppy up here, right? So we had the bull flag clean, breakdown. This should have been a breakdown. We had an inside pattern. Then we popped up. Then we came back down. This looks like distribution here, to be completely honest. It just, I'm not saying it can't push up one more time, but it does look like some sellers are starting to get aggressive here into this strength. But right now, pretty good outside move there, down 4.5%, and it's poised to lose that 50 moving average, but we'll see what it does by the APM close. But Bitcoin's hanging in there okay for now, so we'll leave it at that. Let's look at the European markets really quick here. So the Euro 50 again went up to that 4,400 area, and it stalled out again. This could maybe make one new nominal high if the spiders do. Same thing with like the DAX there. You could make a new short-term high. It actually had a nice outside candle here today. But again, going into a lot of resistance here with these highs and this kind of rollover. So DAX, again, UK, same thing, 78, 71, little pullback. I don't see a ton of upside here, maybe 79, 75. Again, this is all precedent on the spiders being able to hold up. But, they had a nice pullback pattern and they're still holding up okay. But really, if the spiders come in, they're all going to come in. But it's all about what that FOMC statement and really Jerome Powell's testimony comes out to on Wednesday. Anyways, guys, market's basically hanging in there. And closing about a minute here. Let's wrap it up here. You guys take care. Come find me on carnivoretrades.com. I will talk to you guys all tomorrow.